Now, we know recession is getting closer. We had, again, that uninverting of the yield curve in December between the 10 and the 3-month. And again, this is telling us, hey, recession is getting very, very close. Now, before the recession hits, the stock market is likely going to peak. I think it's going to peak up at this trend line here, which I'll be talking about in a moment. Trend line that we're bouncing off of or trying to bounce off of right now. Before the recession starts, about 2 or 3 months before the recession starts, the stock market will peak. It will begin to turn down. As it peaks, it's going to drop very quickly over a month or 2 or maybe 3. It's going to drop 20%, and the Fed will panic, and that's when we're going to get the emergency cut, when the stock market peaks and it starts to drop. Now, I want to talk about the trend line right here. I talked to you about this last week. I told you we can go a little bit lower, below that 20-week moving average, and hit this trend line and try to bounce, okay? And we're slightly violating it and rebounding. You can see it a little bit better in the daily time frame, which I'll show you in a moment. I think we're going to bottom out. I think you're probably going to bottom out this week around this trend line, maybe a little bit lower, or maybe we had the bottom already on Monday. Then I think you're going to get this final push higher. Over the previous 10 weeks, in November, in December, we rose up towards that blue trend line, but we didn't reach it. And we halted right here, forming this trend line right here. Now this trend line is forming this rising wedge going into that blue trend line. So I think where they intersect is likely where we're headed here. Over the next several weeks here, I think we're going to still reach that level. So again, I still think you're going to get another reference point of a divergence here. And I think that at that point, the Russell will get a lower high, the S&P will get a higher high. The Russell's already hit its upper channel line. I think it'll get a lower high, diverge, and that's what they more often than not do surrounding tops. That's what they did back over here. The S&P moved to a new high. The Russell did not. But I want to talk about this trend line fast, but wanted to show it to you right here again here on the weekly chart of the S&P 500. You see the RSI firm up here. We can get back here, climb above our 100 period. We're trying to do it right now. We're trying to test it again. If we can rebound going into Inauguration Day next week, and again, we could see, as I've said, a continuation of the presidential election rally. I'll come back and fill that gap. We could see this move and complete the final fifth wave higher. More about that in a moment. Let's talk about this trend line right here on the daily chart. Here it is in the daily time frame. And in our daily time frame on Monday, we slightly violated that level, but then we had that recovery and slightly violating that trend line just ever so slightly. Again, which I talked about in the weekly time frame, in that larger channel, we could be making our way towards this trend line here, going back to the July peak and these peaks over here. We also have a channel. It is interesting that this trend line does intersect with that upper channel line. Here it is in the weekly time frame. They intersect, pointing up, and that's where I think we're headed. Final fifth wave. So again, you see the rising wedge here outlined in black, and that is the rising wedge from the July peak and from these peaks here in November and December, and then the rising trend line. If we can bounce off of it, you've got yourself this rising wedge, and it can give the final climax rally here going into both of those trend lines where they intersect. I think that that is highly probable if our bullish divergences on the 60-minute charts begin to play out, and also is like what we're seeing on the fear greed index. And you've got multiple point divergences that are developing on the MACD and the RSI here, very similar to what we had over here at the peak over here. This just gave us a pullback right here for the 2023 low. This multiple point divergence here is forming a multiple point divergence now in the weekly time frame. It will likely produce a reversal, but I think you're going to get one more push up. And again, I'll be watching that trend line with great interest because it does come very, very close to our upper channel there in the weekly time frame. That blue trend line, they intersect. I do believe, again, the S&P is going to make a new all-time high. I believe this is a wave 4 correction. I know everybody's saying, oh, it's a head and shoulders and it's over, it's over, it's over. And the people that told us that the December sell-off, there's no way we were going to get a sell-off, which again, 2-minute charts told us we were going to get a sell-off, and those divergences in the daily time frame told us we were going to get a sell-off. The momentum has continued to be bearish. It never turned back to bullish, so we've had a bigger sell-off. Now you've got people turning very, very bearish, told us we weren't going to get a sell-off, very similar to what we had back in July. And again, you're probably going to see a bottom, but very important trend line here on the S&P daily and that weekly trend line. I think you're going to bounce, as I said last week. I showed it to you on the weekly chart. I've been talking about it here for a couple of weeks. Might move back to that level of support, but I wanted to show it to you here on the daily chart as well. And I think, again, you'll see the RSIs turn back up on the weekly chart and here on the daily chart. And I think the bullish divergence on the MACD. Look at this histogram. The bullish divergences that are forming, I think that will allow the MACD to turn back up and recycle back up. And I think you'll see some kind of bottom that like what we had back over here. Let me just pull this down, like the August bottom over here where it ended up turning back up, or again right over here turned back up when we got a higher low. We have a divergence right now on the histogram, so I think that's going to cause it to recycle back up. And then I think you're going to end up forming a larger divergence with the MACD here. And again, that could go on for several weeks. And again, I told you that Inauguration Day could have been sell the news event had we had the rally ahead of it. But because we've had the sell-off since December 6th and on the Dow since December 4th, had the Russell and the Dow just get hammered. Likely that Inauguration Day is going to be a continuation now that we filled the gap from the presidential election rally. It's likely Inauguration Day is going to be a continuation of that trend that will take us towards this upper boundary of this rising wedge here in the daily time frame. And that could, again, take us beyond January. Again, for 10 weeks, we haven't hit that trend line in the weekly time frame. A number is not my target. That trend line in the weekly time frame, and this trend line here, is the target. That these highs are pointing to the next high. Are you picking up what I'm throwing down? By the way, we saw the 10-year yield come down off of this trend line here. We just overthrew it. We still may form a double top with the peak over here before all is said and done. The 10-year yield has been freaking the market out again. Still maybe we might reach that level, but it could be that we turn off of the resistance zone as I've been talking about. We are forming negative diversions. We slightly overthrew the trend line there, and we have negative diversions developing on some indicators. So we'll be watching to see if that's all she wrote. If inflation does come back, if inflation comes in cooler, could we see this come down? Even if there is a knee-jerk reaction, market moves slightly lower or goes back and gets the higher low here. Be watching to see if this marks a peak, or do we go up and get a double top with that, what was it, the 2021 high. Then we have this larger divergence that's developing here. The MACD, if this divergence plays out, the MACD will roll over, but the larger divergence from back over here also in play. The RSI is moving to a new high though, but it is at extreme. So we'll be watching the 10-year yield. And like I said, it was slightly lower. A candle of indecision today in the form of a doji. Bring up my resistance zone here. You can see again we're at this resistance zone, and this is, yes, the 2021 peak. Still may go up, and 2023. Pardon me, 2023. This peak in 2023. We still may end up going up there and forming a double top at some point, but it's probably not going to go much higher than the 5% area there, and that would be it. But again, it might stall here in the resistance zone surrounding this trend line. So we'll be watching these negative divergences. And again, could we get a rally back up? If we see the 10-year peak and it begins to turn down again eventually, and that's it. Eventually, the stock market, even if it rises, because right now they have a negative correlation, the stock market has been dropping since December, and we've been seeing the 10-year, and actually since mid-November, the 10-year went down, the S&P went up. Peaked in early December. We saw the 10-year bottom, and it's been rising up, and the S&P has been dropping since December 6th. So again, eventually it's going to go down, and the stock market will ultimately join it. The dollar may pull back, but then soar to much higher levels. As the stock market completes its top and Bitcoin completes its top, the dollar will, and the dollar's warning that we're going to have some problems because of the recent breakouts on the. Now, again, we can draw a channel on the daily chart, but we also have this trend line that we turned off of from the July peak, and now that's an important trend line, and we may be moving up towards that trend line. I have a channel still drawn on the daily chart, but going back here, looking at this bigger picture from the 2023 low, you have a big rising wedge as well. So this is a trend line of importance. I say July low or July peak. The July peak connected to the November high, connected to the December high. That's this trend line up close on the daily chart. July, November, December peak, and we turned off of it in December. Okay, that trend line is the upper boundary of the longer term rising wedge. If we draw a channel, again, if this low holds from Monday, then that would be a little higher. Whether or not we go to this upper boundary, should this low hold, and we don't know that it will yet, I do think we are carving out a bottom. Again, I'm looking for a rally back up, and I'm looking at some of these trend lines again from the July high, and maybe a channel developing here. And also, again, that trend line really is where I'm looking at from the upper channel, the blue line, the upper channel in our weekly time frame. Now, I think we're going to get this final wave higher, this final fifth wave higher. And again, I think we have these 5 minor waves, 1, 2, 3 to our December peak, now 4. And I think that's either completed here or about to complete, but I don't think we take out the July high. And then, and if we did bottom out here again, we get this final fifth wave. Now, the 5 minor waves are all the fifth intermediate wave. Here we had 3, down here we had 4, and now we have 5, and that is this 5 right here. You can see it right here on the weekly chart. This is, again, wave of speculation. This is what I think is likely the case. I do have an alternative count, but again, correct, and we bounce around this trend line, and we rally back up towards this trend line of the upper boundary of the rising wedge and this upper boundary of this larger channel, and go right into there, depending on when we reach it. Big massive bar, big massive rally, like what we had with the the election. We can get there a lot faster. If we take our time, then we'll get there slower. But I think that's where we're headed here in the first quarter. We peaked, and I told you we could peak in December or January. That could be a peak. My guess is it's not. And because we didn't continue and try to reach the trend line, you're getting this fifth wave right here, right now. So our wave 4 completes. So I think you've got these 5 minor waves right here. I think we're about to start the 5th minor wave. I think that will complete the 5th intermediate wave. Those 5 waves make up the 5th intermediate wave, which is 1, 2, 3, 4, and then 5. So this whole thing is 5. These 5 minor waves are the 5th wave, the intermediate wave. And then I think this whole thing completes the 5 intermediate waves, completes primary wave 5, and that's the 5 with the circle on there. And I think that will complete the cycle. I really do. We'll usher in the bear market. And I don't think you're going to see these highs for a very, very long time. Again, the market is more valued right now. Was at the highs of the tech bubble. On the Buffett indicator, it's reached levels over 200% of market cap to GDP. They're only around 150% back with the tech bubble, and it's at higher levels than it was with the 1929 crash. This is the most overvalued market in history. Oh, 1929, that was a bubble. Oh, the tech bubble and the 2000 top, that was a bubble, but this isn't a bubble. Absolutely incredible. So anyways, this is what I think is the 5th primary wave right here, this whole thing. And when I think it's done, I think you're going to usher in the bear market. We have more time. I think we get one more push higher. I think that's going to go, and again, just at the trend line, eyeballing it, look at Fibonacci extensions. I'm looking at the 6342 area, 6341 or so. To be paying attention to. We got inauguration day. We got the Fed meeting coming up in a couple weeks here. 2 weeks from now, at earnings season. I think we're going to get that final push higher and then complete the rising wedge in this larger channel. And then I think the divergence will be the final reference point of the divergence. And I think that will usher in a reversal, and we'll start a 20% crash. Then the Fed will panic. We'll get a big monster rally back up with the Fed when they do an emergency cut, and because the market, the herd, they believe the rate cuts are bullish, and they're actually bearish historically when you look at it. I've talked about. Please consider supporting the channel today. If you like the charts, you like the information, please partner with me by supporting the channel. You can do that following the link directly below. It'll take you to a secured site. You can donate any amount you want or make it a recurring donation. If you do that, I thank you. I don't have any sponsors, just a direct relationship with you. I turn all those offers down, don't want them. I don't want to sell you a bunch of junk you don't need. I just ask that you step up to the plate and help out and partner with me and do what you can. If you could take a moment to do that, I would really, really appreciate it. I thank you for that. Watch the video all the way through. Very, very important stuff going on. And again, the Fear Greed Index signaling that we're about to bottom and probably around this trend line. Again, I expect the market's trying to bottom with these divergences after a big sell-off with the Dow and the Russell. We're forming these bullish divergences, and I think we're going to try to carve out a bottom. The Dow had dropped almost 7.25%. It's forming these divergences. Here's the Dow up close, and again, we'll see if we carve out a bottom here and then try to get above the momentum cloud and see the divergences push the RSI back above 50. Diversions on the histogram. So again, could that cause the MACD to get a bullish cross here this week or maybe tomorrow? We'll see what happens. So again, we're going to get a lot of earnings. Get a big relief rally here this week, possibly even tomorrow. Rally on the inflation data, relief already that the PPI coming better than expected. Watch the video all the way through. You'll see it. Again, the Russell jumping up over 1% today off of our 200 period, our bullish diversion. So I think you've got a bottom that's going to carve out here. Again, I think the Russell has probably peaked with their bearish diversions up here, and it will end up diverging with the S&P 500. But I think we are likely carving out a bottom. Maybe we dip a little bit back down here to test the low or slightly take it out. But I think you're going to carve out a bottom in this area, and possibly we saw it with yesterday's low tagging our 200 period moving average. I think we're going to get this rebound rally, lower high on the Russell, a higher high on the S&P 500 for the final climax rally for the blow off top on the S&P. While we're filling this gap on the S&P 500, again, on the presidential election results there, you've got bullish diversions galore forming on the S&P 500, just like what we had back over here just ahead of the election rally. Now you've got another one on the 60-minute chart. Now again, the divergences may not be done yet, but here it is on the S&P 500. We've come back down. We have filled the gap here at 57.83. We'll be watching. Does this low hold from Monday? We gapped lower. Is this now a gap and trap and we start moving the other direction? If we get a rally surrounding CPI tomorrow, then maybe, again, we have a positive day for both. Sometimes one is up and the other is down. So, again, we'll be watching is this low tested. And if we take it out, again, we could get another little reference point of a divergence here. But you have a multiple point divergence here, just like we did right before the presidential election rally. Now, we had this little tiny divergence right here, and it led to this larger divergence developing, this little tiny one right here. The divergence here is much larger. You have a divergence in place, just like you did right before the presidential election rally. You're going to get a continuation of that. That's going to give us the final blow off top. Continue the blow off top, get the final climax high. Have the bullish divergence down here on the MACD. So again, that over here as well. So bullish divergence is in place. Multiple point bullish divergence is likely going to produce a reversal. Whether we get another leg down or not with the CPI, we'll see. But we do have earnings as well. And if the CPI comes in cooler, again, maybe we get a big rally. We'll see what happens. Momentum still bearish. S&P daily chart here. That's got to turn if we're going to rally back up. Again, I don't think we're going to go here below 5670 horizontal support, but you get that 200 period, the head and shoulders measures down to the 200. We'll be watching that. I don't think you take this level out myself. I think you get a good chance of bottoming at the trend line of support that I'm talking about in this video. The video all the way through, you'll see what I'm talking about. P daily here, I think we're going to carve out a bottom and momentum will flip, and it could flip counting earnings now. Going into inauguration day, presidential election rally could begin to resume, being reignited by the inauguration day. Nasdaq 100 lost 27 points today, down 0.13%. Again, got to get back above the 10. You got to flip this up. The risk is that the topping tail in the monthly time frame holds on the Nasdaq, and we can't go up and make a new high. We'll be watching that monthly chart, man. But what things look like by the end of the month here in January. Momentum is still bearish. If we're going to rally, these daily charts have to flip back to bullish with reference to momentum. You know, I talked about the S&P in this video, trying to bounce off of the trend line hitting right now, very similar to the trend line right here that we hit with the Nasdaq, and we bounced off of that here in the weekly time frame. Came up to just shy of this trend line right here, the black trend line right there, but we did back test this trend line from the pandemic low right on the nose there. And again, we've got the negative divergences. So we're going to be watching, do those play out immediately, and does the Nasdaq stop making new highs? And if we get a rally with the S&P, Nasdaq join it. Watching Taiwan Semiconductor later this week, and NVIDIA and semiconductors. How does Taiwan Semiconductor impact things? We'll be watching that, and the Nasdaq. Remember, over here, when S&P went and made new highs, Nasdaq did not. And again, it kind of consolidated above the 20 period. Here we're at the 20 period. We'll be watching this closely. Got these bullish divergences on the Nasdaq and the S&P 500. Again, we'll be watching to see if they eventually play out, and if so, can the Nasdaq make new highs? I've talked about the gap fills up here, so again, we'll be looking at that. Low, we have, if we continue to go low, we have the election gap down here, a little bit off the page there, but it's at 20,227. Nasdaq got a hollow red candlestick yesterday, just above our 100 period. If we do go lower, I'll be watching the 100. We're trying to bounce off the trending cloud right here. Again, we had the rising wedge. We broke down from that and rebounded back up, and then we broke down from it again and back tested it. And here we are. Again, we're testing just below that July peak there on Nasdaq, and we bounced off of that level just above our 100 period moving average. So if we do go lower, I'll watch that 100 period moving average and the gap fill down here at 20,227 from the presidential election rally on Nasdaq. And again, we see the stochastic turn back up and the MACD turn back up, and see the MACD firm up just under the center line. It's been consistently positive through the advance off of the August low. It turned positive, and then it firmed up just under there. Do we see something like that again here? We'll be watching that way. But the Dow was up 221 points. The Dow was up just over 0.5%. The S&P was up 6.69%. Up just over 0.1% to close at 58.43, rounding up. The Nasdaq was down about 0.25%. The Russell was up 1.13%, the best performer. The Russell's taken a big hit since the peak late November. I think the Russell has peaked. I think it will end up rallying back up and diverging with the S&P 500. The VIX was down 2.5%, hovering now just below 19, but we're still above 18. Now remember, we got that hot PPI inflation report last month, and this month it was the complete opposite. Do I still think inflation is going to tick back up and continue to rise? Yes, I do. And the Fed can't cut. The Fed's not going to cut rates. They are. In 2007, inflation was higher than it is now. It went even higher, and they still did jumbo cuts. I remember, I was there. They cut, recession had come in, the Fed was blindsided by it, stock market crashed by 20%, the Fed panicked, and they slashed rates. An emergency meeting. You're going to see the same thing happen here. It happened in 2001, it happened in early 2008 when they didn't see the recession that started in late 2007. I promise you, inflation's going to go higher, and everybody is, I had a guy, like I said, the other day, mocking me that the Fed is going to dare to cut rates because inflation is going higher, because they go, oh, it's not possible. That's why the market, the Fed Fund futures, is pricing in sometimes none or one, or priced in or had been betting for 2 cuts in 2025. Previously, a little bit more before we had the December meeting where the Fed buys their expectations for rate cuts down from 4 from the September meeting down to 2. I'm telling you, the inflation is going to go higher, but the Fed is still going to cut, and nobody thinks that is possible. You study history, that is exactly what has happened. Now, this is wholesale inflation. The market really doesn't pay as much attention to the PPI, which is the wholesale inflation, as much as it does to the CPI, Consumer Price Index. The month over month came in better than expected, 0.2%. It was expected 0.4%. The core came in flat, much better than expected. It was supposed to be at 0.3. That's on a month over month basis. The year over year, the headline number also came in better than expected. Everything came in better than expected. Year over year for December, 3.3. It was expected to be 3.5. Even though it was better than expected, that's still higher than the 3%. But it came in cooler than expected, and that's why we initially saw that rally and ended with a positive close. The core came in much better than expected. The core was supposed to come in at 3.8. It came in at 3.5. And again, that's just a little bit higher than the previous number at 3.4%. Now, listen, got a rally, a big sigh of relief, because this was expected to come in 3.8 from the previous number to 3.4, okay? And the headline number, 3.5, above the 3% we previously had. So it was supposed to be much hotter, and it came in better than expected, and that's why we initially saw the market rally, but then it faded towards the end of the session there with the S&P 500. Got a positive close, but it fizzled out. But again, the report, everything came in better than expected. It came in cooler than expected. Last month, it was hot. It was a hot report. There's hope here. That's why we got that rally. And I'm telling you, inflation's going to go back up. But the Fed is still going to cut. Now, we're going to get earnings, okay, this week. We're going to start with the banks, and we're going to get JP Morgan here. We're getting economic reports this week, but we're also getting earnings season kicking off here. And as usual, we're kicking off with the banks, the financials. And again, we're going to get Taiwan Semiconductor before the market opens on Thursday. But tomorrow morning, before the market opens, we're going to have JP Morgan, okay, before the opening bell. We're going to have Citi. We're going to have BlackRock. We're going to have Wells Fargo. We're going to have Goldman. It's not just going to be the inflation data that's going to impact the market. It's going to be the financials and the bank earnings. Thursday, we got more banks. We got Taiwan Semiconductor, and that is going to be interesting to watch. The semiconductor ETF, NVIDIA, and the Nasdaq. It'll be interesting what happens with Taiwan Semiconductor before the market opens on Thursday. So some things to be aware of. It's not just the inflation data. It's the kicking off here of earnings season. And then Monday we have Inauguration Day. It'll be a holiday. It'll be Martin Luther King Day. The market will be closed. Watching to see if we start a big rally. Wave 5 is I think we're going to. I think we're bottoming out this week. At least you got a good chance of it. I really think that the high probability we're bottoming out. And more about the CPI in a moment, but we also have on Thursday, we have the retail sales on Thursday before the market opens, other economic data. We've got the banker earnings. We have the CPI expected to come in tomorrow at 0.3% for the headline number month over month. The core month over month is supposed to be the same at 0.3%. That's what it was last time around. The headline year over year is supposed to come in higher at 2.9%, higher than the 2.7 that we previously had. And the headline number for the PPI came in higher, but it came in below the estimate. So big sigh of relief. And that's why we saw a rally with some volatility associated with it later in the session. Then core year over year is expected to come in the same at 3.3. It was at 3.3. So we'll be watching. Even if there is a knee-jerk reaction and we go down, we still might rally because of earnings. What does Jamie Dimon have to say? And he's always making different comments about the economy, and we'll see what he has to say. And if he says something that the markets might react to, as they do sometimes. Again, we'll be watching to see if the CPI report comes in hot or cool. But just remember, we're also getting a lot of the banks and financials reporting. So again, that will be part of the calculation for the market as well. Thursday, when we get Taiwan Semiconductor, we got the retail sales. So we'll be watching these different economic reports. Now, I think that we're just about to finish the bullish divergence here between the S&P 500 and the Fear Greed Index. Fear Greed Index in blue right here formed a bullish divergence, and we got a bounce. We got this bounce. Now we're forming a multiple point divergence right here. We got the low from Monday. Either that low is going to hold, or we're going to get another push lower, a little bit lower, but likely not take out the July peak on the S&P 500. The support level right here, this is the July peak. We're likely not going to take that level out. And again, hold above here. Again, we'll be watching to see if we can bottom, but I do believe a bottom is developing. Maybe we push a little bit lower, maybe we don't. But again, signals are suggesting that a bottom is forming. We're forming this bullish divergence right here. And again, this is very similar to what we had back over here at the 2023 low. And guess what? We're hitting the 2023 trend line right now. We just slightly dipped below that 2023 trend line showing you in this video. Trend line on the weekly chart. Talked about over the weekend. Down to that level and trying to bounce or slightly dipping below it as we're doing. But we're down here at extremes forming this bullish divergence. Here we reached an extreme and we bottomed out. Here we formed a bullish divergence at an extreme and we bottomed out. Here we reached an extreme and we bottomed out on the S&P. S&P's in red, the blue is the Fear Greed Index. Here we came close to reaching extremes and we bottomed out. So again, highly probable that we are again completing our wave 4, that we're going to hold above the July peak, and we're going to get another push to new all-time highs exceeding the previous peak and probably move towards the 6340 area, maybe a little bit higher. Take our time reaching that level. Again, for the last 10 weeks, we're in week 11. We have not, in November and December, we were not able to reach the upper channel line on the weekly chart. I think we will still do that so the S&P can diverge with Russell 2000. But the Fear Greed Index, I think here is suggesting a bottom, and it is diverging. We saw extreme fear, and now we're seeing fear. And again, this is forming a bullish divergence. Doesn't mean we can't go a little bit lower with the CPI. I do think that we are bottoming ahead of Inauguration Day and the Fed meeting at the end of the month. I told you that if we rallied ahead of those events, Inauguration Day could have been a sell the news event. Because we've gotten the December sell-off now for the month of December. S&P peaked December 6th, the Dow December 4th, Russell November 25th. We've been selling off. Here we are in mid-January. So again, it is setting up for a rally with these bullish divergences, I think, that are forming here. Fear Greed Index and the S&P 500 forming a bullish divergence as the Fear Greed Index reaches extremes. I think you've got a bottom carving out here. We're completing wave 4. Maybe it's done already with our low from earlier in the week. We get one more push down, but I think you're completing wave 4, and then I think you're going to get your final climax move. Final climax rally, the final phase of the blow off top with wave 5.